Thanks everyone. Great to be back in Singapore for the second time. Chalice Mining is a very high profile explorer developer in Western Australia, and we've got hold of one of the most exciting and I guess emerging critical minerals provinces anywhere in the world. The usual forward-looking statements and disclosures, these are available on our website or on the ASX platform if you want to read these in full. So who are we? What's Chalice? We own one of the largest critical minerals deposits in the Western world, and really we're unlocking a new mineral province, a really previously poorly understood part of Western Australia's geology. We're in a very strong financial position, about 112 million in cash as of the end of last year. That means we don't need to raise any capital, dilute shareholders for the foreseeable future. We've got 100% ownership of our, what is the largest palladium resource in the Western world. It's also one of the largest nickel sulfide resources in the Western world. So it's a very, very interesting polymetallic critical minerals project, 16 million ounces of PGMs, 860,000 tonnes of nickel, 520,000 tonnes of copper, 83,000 tonnes of cobalt in the ground. At the moment is trading, I guess, reflecting the depressed nickel and palladium price environment. Somewhat bizarre that a project like this is valued upon spot prices, but yet here we are, given that we're not producing anything. We've spent 180 million on this project over the last 4 years since our geologist made this discovery in 2020. And we've spent that money very wisely, drilling out the very large resource, doing test work, engineering studies, also acquiring the underlying and surrounding farmland. So we own 24 square kilometres of farmland, which substantially de-risks the permitting of building a project in this area. So current enterprise value about 330 million Australian dollars. So you're not buying it for much more than what we've actually spent on this to date. So the leverage here to recovery in prices of particular palladium and nickel is extreme, but also you get leverage against us actually finding something else in the surrounding circa 10,000 square kilometres of untouched geology in Western Australia. So the project itself is going to be the lowest cost PGE mine in the Western world. It's going to be second quartile due to its very attractive base metal byproducts. It's going to be shallow, simple, open cut, and it's sulfide mineralogy. So unlike most of the nickel, the new nickel mines in the world, this is a sulfide mine. So it's a significantly lower carbon intensity, lower environmental impact, and a much more competitive one in terms of cost profile. It's going to have obviously IRA compliant metals. That's a very, very big deal, particularly for our future customers. Because the IRA is going to drive a Western premium for Western products. It's 70 kilometres away from Perth, the project, very, very close to world-class infrastructure that surrounds Perth. We've got a pre-feasibility study underway at the moment. The initial focus of that being, I guess, how might we high grade and maximise the return on investment in the initial phase of developing this world-class resource. So whilst we do that, we've got about 25 geologists combing over the 9,500 square kilometres that surround the new discovery. And we shouldn't forget that there's potential here to find other things other than nickel sulfides. There's a very, very large gold copper mine called Boddington in our backyard, a very, very large and world-class lithium mine called Greenbushes. And as well as obviously Gonville, which is a 30 million ounce contained palladium equivalent deposit. The board and management team of Chalice, we've got a track record of finding these things. We've spent a very, very small amount of money to find Gonville in 2020, about 70,000 Australian dollars. So we've got 112 million dollars in cash, and we can do that many, many times here to hopefully unlock multiple other discoveries of this type in the province. So really it is a strategic asset. The supply of nickel, palladium is really focused on Indonesia, South Africa and Russia. And that is a huge problem for the Western world, because if we try to do the energy transition without having, I guess, a friendly, workable relationship with those countries, we have the potential for those countries to weaponize the supply of those metals, which has all the governments in the Western world very worried. So that's why they've classified platinum, palladium, nickel, cobalt as critical minerals. They've also classified copper as critical in some cases. And what's happened is the Western world has had a capex holiday, has also had a discovery holiday, and meanwhile China and other countries like Russia have been finding and developing metals mines. And that is a huge problem, and what obviously the US Inflation Reduction Act is trying to counter. At the moment, palladium's in a very weird position because a lot of people perceive it as a metal that's not required for the energy transition. At the moment, the palladium spot price is at about the 50th percentile of the cost curve, roughly where that vertical red line is in the middle there. That means that those mines on the right-hand side of that line are actually loss-making operations right now. So the supply is decreasing as that price goes down, but yet people are actually pivoting and buying hybrid vehicles which still require a palladium-based catalytic converter. So demand is robust. So the biggest producer there on the left-hand side actually has negative cash costs. That's Russia, Nickel. They're actually decreasing their supply or their production of those metals by 12% year on year. So they are having huge issues actually maintaining supply. And all the South Africans, for those people who have been in South Africa recently, know how challenging it is in South Africa at the moment from an electricity grid stability perspective. Socially, it is a very, very challenging place to operate right now. So you can see companies there, Amplats, Sibanye, laying off thousands of people due to this, this price environment. So we are going to sit, as it says there in those little blue and orange bars there, we're going to sit in the second quartile, and we're going to outcompete the South Africans and all those mines to the right of us. So why should you care about palladium? It's become a very, very contrarian metal opportunity. And the reason you should care is because hybrid electric vehicles are basically the best of both worlds solution. At the moment, hybrids are growing. The actual construction, manufacturing of hybrids and sales are growing far, far quicker than purely battery electric vehicles. And that reflects that they're lower cost, they have longer range, and they don't require the charging infrastructure that pure battery electric vehicles have. So at the moment, in February 2024 versus 23, battery electric sales actually went down globally by 15%, while hybrid vehicles went up by 25%. That's not the narrative that the media is telling you right now. So you need to really read between the lines, because the media is lumping together battery electrics and hybrids as electric vehicles. So there's a perception that palladium demand is going to be destroyed by electrification, and that is absolutely not true based on the current trends, because those plug-in hybrids, like all hybrids and all internal combustion vehicles, they need a palladium-based catalytic converter. So why is that particularly relevant now? Well, palladium prices, like I said, are at these cyclical lows driven by a very, very large hedge fund short position. So the price is going to have to rebound, and where might you get leverage to that rebound? Well, Chalice is basically the only serious player in the Western world with a major palladium project. As you can see there, there's been a 41% growth as well in vehicle sales over the last 12 months, but a huge decrease in the palladium price, which just does not make sense. So really, there's a lot of reasons why the palladium price will go up. And what are we doing on our side? Obviously, like I said, we're really recutting that high-grade project. So we're looking at our project from a lens of lower prices, so high-grade, more selective mining operations. We're updating a scoping study, which will be ready in the second quarter of this year, with the outcomes of a high-grade open pit and underground starter project. We're also in advanced discussions to secure an asset-level strategic partner for our project that we expect to resolve in the coming weeks. So where is our project? It's just outside of Perth here, for those who know this part of the world. Perth's got fantastic infrastructure, a fantastic advanced mining workforce. We are going to be on the outskirts of Perth using the Perth-based workforce. It's a very large resource, as I mentioned. It's a strategically sized, long life project, world class in many aspects. We haven't yet finished, I guess, our evaluation of how this project may be developed in terms of, is it going to be open pit or a combination of open pit and underground? And like I said, you know, we're really attracting a strategic partner to this project because of its inherent qualities. So if you look through the current spot price environment, which is incredibly weak, where might you go for high quality resource project? I'd suggest this is right at the top of the list. In terms of what's coming up in the next 6 months, like I said, partnering process, high grade starter development case, and then really, I guess we're shortly about to begin the permitting and approvals phase. As it says there, we're about to refer the project to both state and federal governments for assessment. We believe all of those things are going to be basically pointing towards a late 2026 investment decision to build the project ahead of first production later in the decade, likely 2028 or 2029. So importantly, throughout all of that, we are fully funded all the way through to that late 2026 FID. So you don't need to worry about us diluting holders before we get there. The resource, it's a complex resource because of the amount of metal it holds and the I guess the unique traits of the metals mix. We've looked at currently bulk open pit operations to, I guess, progress open pit mining down to depths of 400 to 600 metres below surface. We know the resource extends down to at least 800 metres, and we know mineralisation extends down to about 1,200 metres. So there's never going to be a shortage of resource on this type of project. What's critical is really working out where is the optimal starting point in terms of cut-off grade and where do the economics sort of trade off. And so that's what we're working on at the moment is as a starter case, you know, looking at much higher grade in the initial instance, and we're, as I said, about to report the resource to reflect that selective mining approach. And then upside beyond the resource here. So I guess it's been known for some time that the resource on the right-hand side of that figure, that occupies just a small part of a 30-kilometre long belt, and that geology that hosts that resource, we know that it extends over that full 30 kilometres. We've got indications of sulphide mineralisation over that full extent, but as yet we haven't really drilled out the other remaining 28 kilometres. So there's a huge opportunity there. We've just recently completed some diamond drilling at the northern end of the complex on the left-hand side of that page, and we've also done a very wide-spaced, comprehensive air core program, basically testing for indications of that geology throughout the entire licence area. So we will know shortly, I guess, you know, where to now focus in our exploration efforts in that state forest area immediately north of the resource. But outside of that, I would argue now we've got just as good, if not better, exploration targets on the surrounding 9,500 square kilometres outside of I guess the immediate resource area. We know, we can see Gonville is going to be a project that's going to be a mine, and that, I guess, decreases the hurdle on you know, near field discoveries. But more importantly here, there's potential here to find all sorts of different styles of mineralisation in a very, very poorly understood part of WA. So we've got effectively a 1,200 kilometre long stretch of the western edge of the Yilgarn Craton under licence, and Craton margins is where you go for the big giant nickel copper PGE discoveries. So things like Norilsk, things like Voisey's Bay, they're found on the margins of these cratons. So we've got several different areas of active exploration there at the moment. Probably the most exciting is the area immediately east of Gonville at the northern JV. And we've got 28 targets there to go and progressively test over the course of the next coming months. So a lot of upside here beyond what you can sort of see tangible in terms of resource. So I've already mentioned the Chalice, but obviously this is a very much an opportunity at current levels, just given where spot prices are. We are not producing any metal at low spot prices, and yet that's how the project's being valued. So please come and chat to us at the booth if you'd like to learn a bit more about Chalice. Thank you.